Oh shit.
It would be difficult for me to say that at the moment. Part of the discussions that will take place in the next commission. At the moment, it's looked at regarding how we can get more security of the
Dames en heren, mag ik u?
Good morning. Bonjour.
Hello.
Oh, it's cold also here.
Good morning, everyone, and welcome to today's Eurogroup press conference, which will be given by the President of the Eurogroup, Pascal Donohoe, the President of the European Central Bank, Madame Christine Lagarde, the Commissioner for Economy, Paolo Gentiloni, and the ESM Managing Director, Mr. Pierre Gramegna. President.
So hello everybody, and it is absolutely great to be here in Ghent and to be here in this magnificent stadium, and I want to extend my thanks to Vincent and the Belgian presidency for their excellent hospitality and, as I said, for such an original location within which we can do our work. I'll very quickly run you through the agenda and the content of today's meeting, noting also that we were joined by the Chair of the European Parliament's Econ Committee, Armane Tenagli. So all of our discussion today was in inclusive format, so we invited and welcomed our non-Euro friends and colleagues, and all of the discussion today was on the very important topic of the future of European capital and financial markets. We are now at the end of a very thorough reflection process, which started under a year ago in response to the call by the leaders of the European Union for all of us to step up our efforts to take forward the Capital Markets Union. So together with all of my colleagues, we analysed where the EU stands in a global context, why this is an area that needs renewed political attention. We heard from the private sector, from different market players and businesses on their experience with what's good and what could be better within the European Union. And we all agreed on the urgency in making progress and the need to take action. The ultimate aim is to provide European companies with the financing opportunities, with the capital to innovate, to grow in Europe, rather than having to leave it to other continents and other parts of the world to pay for our growth and to pay for us scaling up. It's about providing more attractive investment and saving opportunities for our citizens. And we are looking at this not just from a top-down approach, but also a bottom-up approach, looking at how we can strengthen the availability of capital and capital markets themselves in individual countries. Now, a lot has already been achieved by our co-legislators, by the institutions that are represented and led here today, but all of us know we still have a way to go. And I'd argue that we face a political urgency, a need to generate political urgency to focus our efforts to deliver more. So today, ministers discussed a draft statement which provided a list of policy ambitions and measures that would, over time, lead to a stronger and more united capital market within the European Union. More specifically, there are three priority areas which we'll refer to as the A, B, C of the future of European capital markets. The A of architecture, how we can reduce barriers, how we can develop a better regulatory and supervisory system that works for businesses, works for investors and works for savers. The B is for business, what we need to ensure that businesses, especially smaller businesses looking to grow quicker, have access as well as the knowledge and capacity to benefit from the appropriate funding to grow and remain competitive in Europe. And then the C stands for our focus on citizens, what we can do to create opportunities for them and to facilitate access to capital markets for retail investors. We had a really long discussion on this with many, many ministers offering very strong points of view on many of the topics that we have discussed. And this provided both additional direction and also additional work that all of us need to do to agree a statement in our March meeting, after which then I will report back to the leaders' meeting that will take place in the Eurozone Summit at the end of March, which myself and President Lagarde will attend. Out of all of those different points, though, I talked about the A of architecture. There's a further A that matters so much in all of this, which is the A of ambition. We have achieved much, but it's patently obvious to all of us we need to achieve far more. Finally, we just concluded on 2 points, work regarding an updated draft budgetary plan statement with regards to Slovakia, and then finally ending on a very positive note where we reappointed Tuomas Sorenheimo as President of the Eurogroup Working Group after all his excellent work over the past 4 years, and we look forward to working with him for another 2. So thank you very much, Cornelia, President Lagarde.
Thank you very much, Pascal, and good morning to all of you. And let me reiterate in front of you our thanks and gratitude to the city of Ghent, to the Belgian presidency, and to Vincent, the finance minister, who has greeted us beautifully in this beautiful city. Next to a football stadium, it's actually fair to say that we all played Europe. I would like to first of all pay tribute to my colleague and friends, the president of the Eurogroup, the team that worked for him, as well as to the Commission for the work, the infatigable work that he in particular and that his team have done in order to canvass the view, in order to understand where there was enough of a landing zone so that it could be incorporated in the statement. My contribution to this morning's meetings was limited to 2 categories of things. Number 1, stress the urgency of the matter on the basis that you fix the roof when the sun is shining, not when the storm is upon you. Number 2, in addition to urgency, the A that Pascal just referred to, the ambitious and the bold ambitious that is needed to move forward on this issue. The second category of my contribution can best be summarized in numbers, and I will mention 3 numbers. The first one is 800 billion per year that will be needed in Europe as of 2031 in order to deliver on the commitment of 2040, 90%. 800 billion per year. Second number, 75 billion per year needed if all European countries deliver on the 2% commitment under NATO. That includes the non-NATO countries, by the way. But 75 billion euros is what is needed in addition to the baseline. And the third number is 250 billion euros, which is roughly 1.8% of Europe GDP. And that is the net financial outflow that leaves Europe to go to the rest of the world, and predominantly the United States market. And it's on the basis of these 3 numbers that both in terms of infrastructure, in terms of post-trading infrastructure, and harmonization of not just the low-hanging fruits, but key items such as insolvencies, ranking of creditors, rapid progress must be made. And apart from that, I would say that we had a very good discussion. Thank you.
Yes, very good discussion, and good morning. And also from my side, to thank Vincent and the Belgian presidency for organizing this informal meeting, for the visit we had yesterday evening to the cathedral, and for this couple of days of work. Capital Markets Union was the only subject that we addressed in the Eurogroup this morning. And this is a work stream so important economically, but also so challenging politically. And I think the discussion this morning showed this. Because the more we seek to be ambitious, and we must be ambitious, the more we touch on national sensitivities. So another difficult file after difficult files that we addressed, the last one was the reform of economic governance. So we all agree on the fundamental role that deeper and more integrated capital markets must play if Europe is to make progress towards its strategic goals. Our investment needs, as Christine just reminded us, are immense, a mountain of investments. Of course, public contribution is needed. I don't like the fact that we exclude this dimension. So the discussion of what else, what next after the end of Next Generation EU is an important one. But we all know that this mountain of investment could be addressed only through private investments. So we need a single market that is of sufficient scale to compete with global rivals in a multipolar world. Because developing national capital markets, important though it is, will not be sufficient if these markets remain fragmented. So the union in capital markets is not a nice to have, it is a must have and an urgent one. I think this was very clear in the discussion today. And it is of course part of the broader discussion on our competitiveness strategy. We will continue, of course, this discussion also tomorrow. So I want again to thank Pascal for his tireless work on this crucial project, his determination to help us forge consensus on a way forward and on our priorities. I think there is an urgent need to be ambitious in driving the Capital Market Union forward in the next political cycle with ambitious actions. And this is where I see the Commission role in coming forward with proposals that are sufficiently ambitious and in helping to achieve the unity that has so far been lacking. Thank you. Yeah.
Thank you all. I'd like to start to echo what the three previous speakers said in terms of welcoming the hospitality that we receive here in Ghent. And the reason why I kept my scarf on, which Minister Vincent van Petegem gave me, is not because it's a bit cold in here, but because I thought it's a nice symbol of the atmosphere that should reign on a football pitch, which is fair play. And I think fair play is also useful at European Union level. And this fair play has helped us to have a good, frank, and useful discussion today on the Capital Markets Union. This is also due to the fact that the preparation that the chairman of the Eurogroup and his team has done, and the EWG under the helm of Thomas, who was just renewed, was excellent, because I think we have a holistic discussion and everything's on the table. Now, we at the ESM share the view that it is urgent to act on the Capital Markets Union, and we fully support this effort. Europe needs a more integrated, deep and liquid capital market. The European one is 4 times smaller than the one of the United States. And this has also an impact on our competitiveness and our strategic autonomy. So I have underlined how important it is that we have more money available for green and digital investments, which is an absolute priority, but there is also lots of other priorities, including defense. I'm not going to give you additional numbers, because the ones that Christine Lagarde has mentioned in the meeting tell the whole story. I would like to say that on the very tricky topics that are about harmonizing national corporate insolvency frameworks, or on another tricky one, which is the common European approach to capital markets supervision, we should also see what we have done in the past. In the banking union, we have achieved a lot in the single supervision mechanism, and we can learn lessons from it. I underline that. So yes, it is difficult to agree on all of this, but we have had a good example in the past that can inspire us. Last but not least, I mentioned the capital market of the United States is 4 times bigger than ours. You could also see that the US pension fund assets stand at a level that is 6 times higher than what we have in Europe. So there's an area where we should and must develop new products for the benefit of our citizens, but also for the benefit of our economies. And last but not least, if we succeed in having a capital markets union, we will spur growth in the European Union. And spurring growth is the best way to comply with the upcoming Stability and Growth Pact, on which we have agreed recently, where there's a trilogue agreement. So Europe has delivered on this, and the capital market union can build on this new Stability and Growth Pact.
Many thanks. The floor is open for questions. Paula? And there is a microphone. There you are.
Thank you. My question is for President Donoghue. We heard this morning Minister Le Maire saying that the statement as it is does not go far enough, and that we need to move forward, and if there is no agreement, then better move forward with a restricted number of countries. What do you think is the crux of the issue? So is there more regulation necessary? And is that what he's asking for? Is there no consensus on the room on that? And how can you hope to achieve EU27 agreement on this? Thanks.
Great. Thanks very much. So the contribution that was made by Minister Le Maire today is the kind of really important political contribution when ministers are grappling with a really important topic. And Bruno asked today for more ambition in relation to how we move forward. We had other ministers that made the case for the delivery of other priorities. Bruno, in his statement today, emphasised points that he's already made to me and he's made to the Eurogroup. He talked about the nature of supervision and how it could evolve in the future and the role of ESMA. He has talked about the need for the development of a common European savings and investment product. And he has made the case for initiatives like that very, very strongly, and also talked about how we can develop, for example, securitisation options within the capital market of the European Union in a way that is stronger than we currently have available. So there are the different priorities that he has outlined. Where I am in absolute agreement with Bruno on is the political urgency of making progress here. The reason why I asked the Eurogroup to take on this project, and the reason why I'm putting so much time into this, in addition to my other commitments, is I believe that action on this is urgent, and I believe this is a very, very large part of the jigsaw that we need to put in place regarding how Europe can find the investment that it needs to maintain its place in the world. And I will be discussing the particular matters that Bruno raised with him in the next couple of weeks, and seeing if we can identify an agreed way forward on those topics.
Thank you, David. Please.
To Eurogroup's Donoghue first. The big differences that we've seen emerge on capital markets union, particularly on supervision, do you think those are bridgeable to the point where the currently quite ambitious statement is meaningful? And then for President Lagarde, the recent Q4 pay data, are you reassured by that, at least that no significant second round effects will emerge in the Eurozone in the next year or so? Or will it be necessary to wait for Q1 to be sure? Thank you.
So I only want to do something if it's going to be meaningful and ambitious. And the statement that we have today, the length of the statement, the different areas that are covered off in it,
And I'd make the case even the variety of strong reactions that it engendered is proof of the fact that there's a lot of ambition in that statement already. Do I believe we can find a way of finding a common ground on the matters that ministers discussed today? Yes, I do. We have a lot of work to do now in the next couple of weeks, but the moments before reaching agreement on really important topics are always full of really strong disagreements. But those disagreements have a common aim. And that common aim is how can we make a big step forward in a part of our economic union that we all feel is underdeveloped and can achieve more. And the tone of the contributions today reflected that. So I believe we will make progress. I believe we will find a way of reaching compromise. And I'll just emphasise what I begun with. The only reason I'm doing all of this is to find a statement that can supply further ambition. And that is my test of our efforts.
Take two more questions.
Thank you very much for... no, that's okay. Sorry. So thank you very much for your question. The Q4 wage numbers are obviously encouraging numbers. But as we have said in our monetary policy statement, the Governing Council needs to be more confident that the disinflationary process that we are observing will be sustainable and will take us to the 2% medium-term target that we have. There are many sectors and employees that are covered by negotiations that will be completed in the course of the first quarter of 24. And I think that those numbers will, especially if they continue to be encouraging, will be important for us to assess going forward in order to reach confidence. Thank you.
Thank you. Jorge, please.
Good morning, good afternoon. Jorge Valero with Bloomberg. I will start with Madame Lagarde. Some of your colleagues in the Governing Council said that rates cut before the Fed is unlikely. I know that you always say that you are an institution data dependent, but broadly speaking, I would like to know if you will share this view. And secondly, for Mr. Gramegna, your institution, the institution that you lead, remains broadly untouched since the bailout period. And we saw how during the COVID crisis it was tweaked in order to offer the possibility of credit loans that also remain untouched. I don't know if since defense is emerging as a big priority and there is a lot of brainstorming around what to do to finance it, EIB, Eurobonds, do you think that the ministers will adventure also in discussing the possibilities of the ESM, or that moment in the past when we have long discussions about the ESM for COVID crisis were very long for no results at the end?
So thank you very much for your question. Two things. One, as you said, the ECB and the whole Euro system is data dependent, and we will be looking at multiple data. In addition to wages, we will be looking at profit units. We will be looking at expectations. We will be looking at corporate telephone surveys results. We will be looking at the bank lending surveys and many other data points that are important to us. The second point that I'd like to make is that the ECB is independent. And we're determined to continue to be data dependent and independent in the assessment that we make and in the policy decision that we approve.
Thank you for the question, which I think is a quite logical one. It is obvious that the geopolitical tensions, the war in Ukraine, have triggered discussion about security and defense, which will necessitate huge investments and also increases to a certain extent risks, financial risks for the countries of the Eurozone. This is obviously not only on my radar, but is on the radar of the 20 countries. And I have visited the 20 countries, member states, over the last year. And quite a few have asked in which way the ESM could eventually play a role in that. I've taken all those ideas with me, and I'm now liaising with all the countries to see in which way the ESM could play a role. This being said, we are there to help the countries of the euro area individually. This is what is in our mandate. And if obviously whatever the cause of the problems on the ability of member countries to access financial markets is in a way not the key. The key is the financial situation of the member countries, and we're there to protect them and to support them when needed.
Thank you. One last question.
Hello, Francesco Canepa from Reuters. So my question is for Ms. Lagarde, and you said that 250 billion euros leave the Eurozone every year, if I heard you correctly. Could you point me to the right line in the financial account of the euro area? Because as far as I can see, the euro area has a positive financial account, but maybe I'm reading it wrong. Thank you.
You know, I'm always informed by my excellent economists and those who spend a lot of time reading those documents carefully, and they assure me that the net in the financial account, the net outflow is 1.8% of the GDP, equal roughly 250 billion euros. But I'm sure that I can have them call you so that they can point you exactly to the line item that will be informative.
Many thanks to everyone.
Thank you all. Super.
Have a good continuation of the day.
shit.